Hello and welcome back to our Proactive London studio, where I'm delighted to be joined in person for the very first time by Bundeep Singh Rangar, who's the CEO of Fineqia International. So a very warm welcome to you, Bundeep. How are you?
Thank you, Tom. Very happy to be here for my debut appearance on your studio set, but hopefully not the last one.
Very lovely sentiment, well expressed. And I know you're doing the rounds at the moment. You've just gotten off the plane today, a busy man promoting the business, but tell us a bit about it first before we delve into the details.
Sure. So we're a Canadian-based company. We're listed in Canada. The company Fineqia International trades under the symbol FNQ. And really what we're doing is we're building a business that's focused on the digital asset industry. And we're doing this with a global remit. So our operational presence is here in London. We have subsidiaries out in Europe. We have sort of reaches out there in terms of presence and connectivity and networks in the Middle East and the Far East. And of course, we have our base initially out of Canada. So it's quite global in that sense. And our thesis is to be a conduit, if you may, which is transparent, high standards of governance. And that emanates from the fact that we're a listed entity subject to a regulatory oversight and being listed obviously very transparent, for investors to look at an asset class that's still largely nascent, that has tons of opportunity because it's a young asset class, but it's also marred by confusion and, of course, recently some bad actors. So we're really the filter for investors to say, how do I get exposure to this emerging digital asset economy, but through people who can be trusted for what they do based on their track record, based on their structure, based on the governance and transparency that comes with a regulated listed entity. So that's really the prism that we want to operate with.
It puts you in a very responsible position, doesn't it?
Yeah, well, I think our business reputations have been built on that responsibility, so it's a continuation of that thesis.
And you have used the word reputation there. You do have yourself, of course, and some other quite big names in the industry as well.
Yeah, we were fortunate to have some very good people on our company's management and board. And that, again, is testimony to what we're building because they buy into what our thesis is. And I think it serves as a degree of comfort for a lot of investors looking at us. So our chairman is a former director at the London Stock Exchange. He is also the head of the alternative investment market there for 7 years. And he really champions governance and transparency. So Martin Graham is his name, and he serves as the company's chairman. We've also had a few other people join from the London Stock Exchange group. Our head of distribution is Nirosh, and our head of strategies, Michael Coletta. And they, again, came to us from a comfort zone of the LSE to be part of a transformative change that's underway in the industry that we're active participants in.
Understood. I'm keen to get a sense of just how much risk is involved in an enterprise like this one, because obviously the digital economy is very nascent, as you say.
So I guess the question is risk in what sense? It's calculated, it's measured. Without risks, no risk, no reward is one of the theses you operate under. But we mitigate that by looking at, first and foremost, the people who we back. So if we look at making an investment in a company, it's really checking out the actors in that space, the people who are critically responsible for implementing the company strategy, be it founders, be it management, be it their shareholders. And then looking at their business model that's not premised on too much speculation. We want to see like real life examples of use case scenarios. We want to see where protocol adoption is taking place, where the nodes of traffic are validating what their business model is about. So it's taking a calculated bet, not dissimilar to maybe what happened in the internet industry perhaps 20 years ago, when we had the protocol layer there with TCP/IP, and then you had emanating business models around search, around e-commerce, comparison shopping, travel. So looking at the players back then, you would say, like, do these people have the credibility? Is e-commerce going to take off? Yes, it will take off in time. So similarly, we're looking at, are digital assets going to be part of the future? Yes. And in a almost counterintuitive kind of way, now is the time to be investing in them because the market's not as frothy as it was 18 months ago. Unfortunately, a lot of us play to our herd instinct and go for things when they're moving upwards. We're getting tips from our taxi drivers, which is not the time to be going in.
Yeah, absolutely. I suppose one additional benefit to somebody investing in Fineqia is that even if one of your portfolio companies went to the wall, there are still others, right? So they're mitigating their risk in that way, aren't they?
Yeah, so Fineqia has sort of three sides of the house. There is one, exactly what you said, which is an investment portfolio. And there, it's, as the name suggests, it's a portfolio, so you're diversifying your risk. We've had the good fortune of having made investments back in 2018, 2019, which have now gone up significantly in value and are also closer to the maturity in terms of an exit realization, right? If you're putting money in now, that would be 5-6 years from down the line. So we're taking those investments and using that to create a venture fund. So we can effectively cornerstone our own fund by means of our own equity investments. And that gives us a jump start on starting this venture fund. We think now is a good time to invest. So we want to get more capital and deploy it now with the demonstrable track record of what we've done over the past 5 years in this space. And again, the diversification plays to the investor sentiment. So that's one part of the house that we're building. The other one is creating listed securities. So the venture fund is focused on private shares and tokens. The second part focuses on primarily exchange-traded notes. So they're similar to more familiar ETFs, but notes have the distinction of being able to offer a yield. So unlike a fund that gives you exits upon realization, this will give you ongoing yield. So the exchange-traded notes will have crypto assets or digital assets as the underlying collateral, which will give investors exposure to a digital asset and the price appreciation over time there, but also yield that's generated from staking activities or DeFi activities that therefore will give a return above market during the course of holding that security, regardless of where the price movement goes. And we're coming up with some pretty innovative products there that will generate above market yields from both deployment and staking as well as DeFi. And we are really building a business here that will be quite different and innovative. And the last thing we're doing is creating something which is more incubated. So we're really keen on some of the, with a lot of new things that come out, initially there's a lot of noise, a lot of buzz, but then the dust settles and you say, well, what's really going to pan out here? So one of the things that came into vogue that was quite exciting, got a lot of hype, if you may, was NFTs, yes, right? With the Bored Apes and what have you. But our view is that you have to find intrinsic value in them. So aside from looking at the kind of novelty factor or the uniqueness, we're looking at NFTs, and in our case, it's music NFTs that are income generating and royalty bearing. So you actually have intrinsic revenue there, therefore intrinsic value, not purely based on perception, but actual monetary value there. And just as a last point there, there's a lot of chat these days about artificial intelligence and where AI is going. And in music, there's an interesting twist there because there are AI-generated music tracks that imitate the voices of well-known singers. I'm sure you've come across that as well. So the NFTs are now taking a new role. Not only are they allowing for revenue generation based on royalty streams, but actually as a tool for provenance to show that these are authentic voices of well-known or emerging singers and not some AI-generated imitation. So again, it goes back to our thesis of being the filters for looking through the noise and focusing on what's real versus what's, for lack of a better word, virtual.
Yeah, well, rather you than me, Bundeep, because my goodness, it sounds like an absolute minefield, but you seem to know what you're doing anyway. You are actively fundraising at the moment, so how's it been going, and what kind of people are you looking to buddy up with?
Look, we're a listed company. We had a very successful private placement last year where we had targeted initially about 4 million Canadian dollars, and we went past that to nearly 5. We've had some interest from investors since then, so we opened it up for another $1 million. It's priced at $0.01 per share, so it's as low as you can go, with a warrant at 5 cents. So if the price moves up, you got another roll at it over the course of the next 3 years. So it's a 3-year warrant. So investors can participate in the private placement, which is ongoing right now. And they can also look at the products we're putting out, which is the venture fund, if they want to look at an allocation towards an alternative investment product. And in due course, of course, our listed exchange-traded notes. Lovely
stuff. Well, I do just have one final question for you, Bundeep,
Sure.
and it's one that I love to ask people when they come in. And sometimes the answer can be quite long. So I guess we'll see.
Okay.
Is there something about your business that people tend to misunderstand, in your opinion?
Great question. I think they do. I think the issue is, do we get lumped in with a trend, right? So again, going back to the thesis of, our price sometimes moves up when the macro winds are in our favor. And that sometimes comes at the expense of the substantive build that's taking place right now. So I think people misunderstand the core business that's being built now versus maybe perhaps a more depressed or plateaued out market at the moment for digital assets. But again, going back to my comment earlier, this is the time you want to be going in, not when everybody's going in and the prices are going north. So for us, this is the right time to be building. A down market's a good time to build or buy. So we're building, and the stock's up there for buying. I'd say the other part about us is people can't necessarily put us in a cubbyhole, right? We're not purely investing. We're also managing. We're also incubating. And we're a listed company, which is unusual because many times venture funds tend to be purely private. So to give people exposure to a private allocation via venture funds, incubation of things like music NFTs, and a new line of business through exchange-traded notes, all through a parent company that's listed, where the equity value is growing in that holding company. We're not siling off any economics. They're all feeding up to the top co, which is listed. That takes a little while for people to get their heads around and understand. But once they get it, then they go, aha, okay, so you're really a proxy for the digital economy. And the exposures across different classes, whether it's privately held tokens or public instruments. And once that seeps in, then people go, aha, okay, now I can see the value. So it's a bit of learning that they have to go through to understand our business model. And that's probably the challenge out there.
Well, hopefully we've helped them a little bit today.
Certainly hope so too.
And yeah, thank you very much indeed for coming in. It's been a pleasure.
Likewise, Tom. Thank you for having me.